The International Monetary Fund has published its latest edition of the World Economic Outlook report that is dated July 2023. And according to the IMF, global growth is projected to fall from an estimated 3.5% in 2022 to 3% in 2023, which remains weak by historical standards. Meanwhile, the rise in central bank policy rates to fight inflation continues to weigh down on economic activity, and as a result, global headline inflation is expected to fall from 8.7% in 2022 to 6.8% in 2023. The recent resolution of the US debt ceiling, as well as the strong and decisive action by authorities to address the banking crisis in the United States and Switzerland, helped to avert the risk of contagion and maintained stability in the financial markets. However, turbulence in the financial sector could resume as markets adjust to the further policy tightening by central banks. However, the balance of risks to global growth remains tilted to the downside, given that inflation remains high and could rise even further due to unexpected shocks, including an escalation in the war in Ukraine, as well as extreme weather conditions that could trigger more restrictive monetary policy. In the meantime, China's economy rebounded after it lifted its strict COVID lockdown policies. However, China's recovery now appears to be slowing down, and that in part is due to the unresolved challenges facing the real estate sector. And for emerging markets and developing economies, growth in 2023 is projected to be broadly stable at 4%. However, for countries grappling with elevated debt, the impact of higher interest rates, coupled with the lack of appetite for emerging market debt, could increase the risk of sovereign debt distress. And in summary, the IMF concludes that for most countries, the priority remains achieving sustained disinflation whilst ensuring financial stability. Therefore, central banks should remain focused on restoring price stability as well as strengthening supervision of the financial markets.